SoFi's first quarter earnings are going to be reported on April 29th pre-market, which is next Monday. And in this video, I'm going to be sharing my Q1 earnings predictions. In making this video, I went back over the past 3 months and I looked at what SoFi was reporting along with their guidance and estimates and the previous trends, and we'll see how it holds up come next week. Let's jump right into it. Okay, so the content that I'm about to share, I had a lot of it. I shared a bunch on SoFi Weekly, but in this video, I want to dive more in depth and explain some of the rationale behind the thinking. Let's start first and foremost at members. My estimate for members, it's no surprise if you watched the SoFi Weekly on Friday, 635,000 new member additions. Why? Well, over the past 3 quarters, what we've seen from SoFi is we've seen 584,000 new members for Q2, 717,000 members for Q3. This was a record. And then their second best quarter ever, 585,000 members for the most recent quarter, Q4. Meaning that the last 2 quarters respectively have been the largest member addition quarters on an aggregate basis. And if you look at the trend, we are seeing a gradual acceleration upwards with regards to the members as the company gets larger. Management for 2024 has said that this is going to continue to ramp. Anthony Noto in a recent interview said that 800,000 to even upwards of 1 million members is the expectation for SoFi's new member additions. So we know they're going to grow that base of members larger. Over the past year, the focus was profitability. They wanted to get us through that hump in terms of being a sustainably profitable company. Over this year, I think that's going to be in the bag, and so management can focus on acceleration of member additions for the business. Now, I think most of the acceleration is going to fall into Q2 and beyond because Q1 is going to be still that confirmation of profitability. I think they still need to be careful with regards to the numbers here so that they don't come in below expectations. Noto has said that they want to ramp this upwards. I don't think that's going to be a sudden shift. I think it's going to be a gradual step change. And so for this trend, I'm also looking at the wider member additions and some seasonality effects as well. We always see a pullback from Q4 to Q1. Now, one of the things going to the positive trend for members is this MBA deal, which is going to be beneficial for new member additions. The MBA deal, however, fell halfway through the quarter on February 14th. So it's going to have an impact, but not as big of an impact as it's going to have on Q2 and going forward. Because a lot of the initiatives that we're seeing, starting with the play-in tournament on the NBA side of things, the Wyndham Clark partnership and the PGL, Golf League setting off in January, and all the way down to the benefits that they're offering with regards to credit card benefits, referral benefits, all the sign-up bonuses. A lot of those are going to hit in Q2, and so I think management is going to be more willing to spend a little bit of money in Q2 and Q3 and onwards after they've secured that profitability. And that profitability for Q1, they need to continue that trend of profitability, and so they might be a little bit more conservative on the spend for Q1 and then accelerate going forward after that profitability is not so much at risk as it is right now, because right now they have 1 quarter in the bag. Wall Street is mainly looking at them to continue on the second quarter of profitability. New member addition blowout numbers is not really what's going to change Wall Street's mind. They don't really look at that. But if they miss on the EPS line to get a blowout on members, that's going to be a disastrous quarter, and Wall Street is not going to have confidence in the business. So they definitely need to have that repetition of profitability to build that confidence and trust with Wall Street before they can allocate more spend to members. But even if you look back on the chart, this is not very conservative, the numbers that I'm saying. And they might come in very much lower than this. They might come in at 585 again, and that's perfectly fine, right? We generally have a dip from Q4 to Q1, and that makes sense. So I think with regards to the NBA deal and with regards to the catalysts that are coming out, we could see a bump up from that 585 range. Again, assuming that gradual stair step towards that 800,000 to 1 million members a quarter, which we expect the company is guiding for towards the end of the year. But I don't think it's going to be such a blowout number. I think Q3 was a blowout number due to Taylor Swift and the SoFi Stadium and all of those catalysts, which did a lot for brand awareness coming to fruition. I think Q3 this year has the potential to be something like that with summer. There's a lot of events that are going on. I don't think Q1 is going to be the blowout quarter for members that we expect it to be. And so for members, my number is 635,000, which is still on the high end of the range. Now, products is an easy extrapolation from this. It was interesting to think about, I just multiplied my member number by 1.5, but we know that the ratio between products and members has fallen from that 1.5 benchmark somewhat. And so I took some off the top. Initially, I had 952,000 new products, but I think they're going to come in somewhat lower than that. So my product prediction is 935,000 new products as a result of this. Either way, this will make us cross the 10 million products threshold, which is a milestone for the company. Regardless of where they come in this range, even if they hit fewer than 900,000 products, they're going to cross over 10 million this quarter, and that's great. And previously, I mean, SoFi guided for lending segment to be flat. We know that lending doesn't really grow as much as financial services. So the vast contribution of products is in financial services. And that's an important factor to keep in mind is in financial services, the barriers to entry are much less. And through some promotions, they can definitely cross-sell some of these products much easier than trying to get people into that lending ecosystem, which needs real stakes, right? So especially if we expect financial services to become a bigger contributor to the revenue mix altogether from a dollars and cents perspective, it makes sense for them to lean heavier into the financial services side of product growth. Although with that said, from a products perspective, and we're going to move into financials in just a second, but I do think this quarter will set the tone for what the year is going to look like from a growth perspective. It's going to be an interesting quarter regardless because the guidance expects lending to be flat to negative. And so we really need to see financial services and technology platform carry the weight that lending platform has historically carried for the business. We're going to see that, but I'm going to talk about that a little bit more in financials. Let me jump over now very quickly to Galileo. With regards to Galileo, historically, when I've been talking about SoFi predictions in the past, Q1 was my estimate as that proof of concept being validated and reflected in the Galileo new account additions. The language around the city proof of concept was in the past tense. We saw Chris Lapointe at the end of February attend a fireside chat, and he basically said, we have completed a POC with a top 5 US bank. I've done several videos on this. The community also went in depth and discovered that there's a high probability that this bank could be Citi. And yes, there is some circumstantial evidence that points to other banks, but if it is Citi, the evidence that the community found dates back to late 2022. And if you just extrapolate out 12 to 18 months, you come around this time for that range for that proof of concept to be validated. And so Chris Lapointe a couple months ago basically validated, hey, this proof of concept is completed, and now we'll be waiting for those accounts to move over. If that is this quarter, then I think that we have a big potential for Galileo accounts. We could see a big step change, like 12 or 13 million accounts. If that's not the case, then we can see a steady accumulation of what Galileo has historically been doing, which is about 7 to 8 million accounts. So I don't necessarily have a tangible number for Galileo. I mean, last quarter we saw 8.6 million accounts. I could see them being 8 or 9 million this quarter. But if the POC has been approved, and I mean, we won't get a confirmation from SoFi saying, hey, we actually are working with Citi now, we're just going to see a huge jump in the number of accounts. And that could be the best indication that we have that Galileo is working with a bigger client, like a top 5 traditional bank. And so if we see something like that happen in the numbers, then that's the first thing that I'm going to think about is, oh, wow, maybe they validated a proof of concept, and that's what accounts for this big shift. So that remains to be seen for Galileo. But again, I think the overall thesis of this video is that financial services and the technology platform are going to have to set a tone for what that revenue mix looks like in 2024. If we assume lending to be flat and we assume SoFi to be growing, let's say 30% for the sake of argument, then financial services and the technology platform both have to be growing much in excess of this to make up for the lending segment being flat, to still have SoFi growing on an aggregate basis. Lending is about 20% right now. Financial services is about 75%, around that range right now. And so we expect both of these segments to accelerate in terms of their growth and in terms of their contribution to the revenue mix so as to make up for what we're going to lose in the potential lack of growth in the lending segment. In terms of lending, I think this piece is the toughest to predict with regards to SoFi. I mean, we simultaneously have this management team that we know guides conservatively. We have a macro environment that's baked into this guidance that's subject to wild changes. And we have a lending segment which management guided will be flat for 2024. Now, I went back to some of my previous videos throughout the first quarter just to confirm the news that I highlighted in the past SoFi Weekly last Friday, just to make sure that I was correct. And the fact is that SoFi did confirm 2 personal loan securitizations in Q1 of over $1 billion in loans, along with their forward flow agreement, which they've mentioned in earnings calls. And from their 2029 convertible notes, we know that the capital ratio has increased. I think all of this will be stronger than expected for lending. Rates are still high. We've had no rate cuts yet. Capital ratios have changed. We've seen the news around Q1 loan sales. I didn't break out specific numbers. I could totally see student loans above 800 million, maybe even above a billion, although that's quite bullish. I've been bullish on student loans in the past, above the range, so I'm trying to pair my expectations a little bit. For personal loans, I do think that we're going to come in above the range. We are still in a macro that is a high rate environment. We haven't seen any cuts yet. I said in the last earnings call, on the Q4 call, that I don't think for a second that lending is going to come in negative for the year. It's probably going to be a single digit increase for the year. This is just SoFi guiding conservative is my estimate. Now, sticking with the lending segment, in terms of deposits, in the past 4 quarters, we see over 2.5 to 3 billion in that range. I think it's just logical to stick within that range. Although it has been increasing steadily within that range, it could see over 3 billion this time around. But I don't think we're going to see like 3.7, 3.8 billion. I think we're going to be, in between 2.8 and 3.2 billion in that range. It's steadily increasing. These are somewhat predictable trends that we can see that don't fluctuate wildly. So I'd be really surprised if we saw anything above 3.4, 3.5. I wouldn't be surprised at all if we saw something between 2.9 and 3.2 billion. For financial services, I don't think there's anything drastically outside the range. Like I said, I'm keeping in mind with that guidance under the assumption that these will have to accelerate in terms of their growth to make up for the lack of growth in lending. Credit card, interesting point here. They're actively investing in credit card. Credit card defaults are around 15.5% currently. This has been going down. I think this quarter we're even going to see them under 14%. So we'll see where the defaults come in for credit cards. It's actually going to be interesting more so to see credit card defaults in Q2. Given the added benefits that they just announced for credit cards a couple of weeks ago, I just want to see how that affects their numbers. Now, in terms of financials, I just want to reiterate one more time that financial services and technology platform will have to be very strong to account for the flat lending segment. I think revenue could come in around 590 million. The street is only expecting around 550 million range. One thing I will say here is on a costs perspective, stock-based compensation might actually be a little bit higher this quarter on an absolute number sequentially because they had headcount changes on the executive level. They had Dana Green on their board of directors. They had Arun Pinto join as their chief risk officer after Aaron Webster left. They're also replacing that role. They had Chad Borton leave, the head of SoFi Bank, and they had somebody else take his place. And so there are executives shuffling around. That is going to affect them from a stock-based compensation perspective. However, I don't think sales and marketing is going to be outlandish in this quarter. Again, I don't think members is going to be a breakout quarter for members. I think sales and marketing spend is going to accelerate as we go on through the year, but I don't think it's going to be massive. And after we plug in all of these costs, my estimate from a net income perspective is somewhere between 30 and 40 million, maybe 30 and 45 million. Around 1.5 cents to 2 cents EPS. The guidance is 0 cents EPS. And so I do think that they're going to come in above this guidance. If we just see the trend here, they've been beating by 2 cents or 3 cents every single quarter that they report. And so I think that we can be within that same trend, given that they sandbag and given that Wall Street sandbags on top of SoFi sandbag. So, 1.5 cents I think is reasonable. 2 cents is fantastic if they hit it. If they don't hit it, they still beat by a wide margin. Even if they come in at 1.5 cents EPS. In terms of the price, this is just the dessert at the end of this whole video. I could see it going to $9. I could see it fading back. Ideally, I'd love for it to form a new base. I mentioned in the SoFi Weekly video on Friday that Palantir surged up after 2 quarters of profitability. Why? Well, because in large part that Wall Street got that confirmation of sustained profitability going forward, and they could predict that in their models. And I think that's where we're at with SoFi right now, is the first quarter of profitability came in and the street is saying, okay, that's great, but is this a fluke? Is this repeatable? And is this predictable? And is this something that's scalable, that can scale? So the implied move, if you look at the options market, is around 15% up or down. And just plugging those numbers in, let's say we close the week at around $7.50 and you plug in 15% of that, that's something like $1 on top. So $8.50 range, maybe $9. And we'll see what the continuation is, if there is any continuation in that stock price movement. Just as a reminder, I will be live streaming the earnings on Monday morning, bright and early, 8 a.m. on this channel. So make sure that you tune in for that and we'll watch the earnings together. I'm also going to have a bunch of special guests on there to help us with our analysis of the earnings. Thank you so much for listening. Let me know what you think of the predictions below, and I'll see you in the next one.